But if that gets broken, then there's not a lot of support until you get to like 13 to 12,000. And I think it's looking more and more like that is going to be the ultimate outcome here.
Hello everyone and welcome to the Daily Crypto. We are back with a super exclusive video for you guys right after the Fed's latest meeting. But before we get into it, let's take a look at the Fear and Greed Index for today. As of recording this video, it is at 22, slightly lower than yesterday. Bitcoin is trading for $19,200 whereas Ethereum is going for $1,310. With that being said, let's start today's video.
So I think that's the big thing. And this was a shock to the US equity markets, is you basically got the 75 basis point hike, which everyone expected. That was not a surprise. But the statement was unbelievably hawkish, in fact, guiding the market that they're even going to continue to be aggressive into year end, basically upping where they're saying interest rates will be by year end. And that shocked the market. And this was such a wild day because that statement alone dropped the market precipitously. We saw about a 2% drop in the S&P in the matter of 20 minutes. Then Jerome Powell did his press conference. And in the press conference, he kind of was ever so slightly open to letting economic data dictate. And all of a sudden, the market just ripped higher. And we saw the markets go all the way to new highs of the day. So now we've rallied basically up 3% to the upside. Now, all of a sudden, the market started to redigest what he's been saying. And they're like, wait a minute, we're not going this way. And the market sold off and made new lows of the day, basically dropping over 3%, ending at the lows of the day. It was a day for the ages.
The Fed announced in their most recent meeting that interest rates will be hiked by 75 basis points. The market reacted to it and we saw a sell-off, but then Jerome Powell made some remarks that indicated potential growth in the future, and it resulted in new highs for the day on the S&P 500 chart. But Gareth says the market will consolidate as investors start to really understand the comments made by him.
And I'll show you guys here what the chart looked like on an intraday basis. This is the 10-minute chart. You can see starting here, it was real quiet. So all day long, everyone was just waiting. Here's where the statement came out. And so we were up on the day. This is where we closed the previous day. So the markets were up. We sold off from 885 down to 820 on the S&P. So, I mean, that was a big drop, $65 drop or 65-point S&P drop. We then rallied all the way back above 900 to 907 and then closed down at 3789, 3790. So one of the wildest days I have seen in the equity markets in terms of whipping the markets. And again, it sets us up for just probably a pretty crazy day tomorrow where the markets are trying to really figure things out.
As Gareth just explained on his chart, it was one of the most volatile days in a very long time. This goes to show how sensitive the markets are to news like this, which is why some traders prefer not to trade during volatile times like these.
Yeah, I mean, this is the kicker, right? And I've said this before. I think the Fed to me has always been behind the curve, whether it's when they're printing money when they really shouldn't be, or when they're tightening out of panic because of inflation in this scenario. And I really, if I could talk directly to Jerome Powell, I would say be very careful here, because now you've raised 3 times in a row, 75 basis points. You're guiding that you're probably going to raise another 50 in November at least, maybe another 25 into December. And we haven't even seen the full effects of the higher rates yet. Right. So the economy still hasn't digested all of that. And you have to be careful here, because with interest rates, rising and inflation still high, if we go into a bad recession, and let's say we go into a global recession, which it looks very possible we will, how do we get out of that recession? If you think about it, every past recession, the Fed's printed us out by lowering rates, quantitative easing. But with inflation at, let's say, even if it comes down to 4%, they're not going to print us out. They can't, because it would send inflation soaring again. So it's a very tricky scenario, and I think the market is starting to be really nervous about that aspect.
The decisions Jerome Powell has made till this point have not left many choices for him in the future, and all of them will make matters even worse. he has been increasing rates at a very fast pace, so much so that the markets haven't even properly absorbed the previous hikes, and here he is, increasing by another 75 basis points. All these measures could serve as the catalysts for a full-fledged financial crisis.
So nothing's changed, unfortunately. In fact, the hawkishness of the Fed is exactly what Bitcoin doesn't need right now, and it's pushing it lower. So if I show the Bitcoin chart here, what we can see is that you've been hammering on this level over and over again. This is back in June, in late June, or excuse me, this was, June, in early July, in mid-July, and then over here in September. And look at what's happening on this candle today off the Fed. It looks like we're starting to break lower. Now, we will have a little support at the June low of 17,500, but if that gets broken, then there's not a lot of support until you get to like 13 to 12,000. And I think it's looking more and more like that is going to be the ultimate outcome here.
All risk assets will definitely take a hit because of the rate hike, which is why Gareth is still sticking with his theory of Bitcoin going to 12,000. As he showed us on his chart, Bitcoin's last hope is the 17,500 level, which is also the 2017 high. Otherwise, it will free fall into the 12 to 13K range.
So for me, there's no question that it will exist. The question is, how long does it take to get regulation out there where institutions start to feel comfortable investing in it? So there's always going to be this need and this trust that Bitcoin, there's a run of 21 million. And so therefore, it's not the fiat currency that is the US dollar, is the yen or the euro or any of these other currencies that the governments can just print nonstop when they want to stimulate. And so I think you have to look at it like that. And you have enough big money, the Michael Saylors and a bunch of other players that have drawn enough attention to it. And then you have countries like El Salvador that have adopted it as kind of a currency there. I do think that it will survive, but it's going through its dot-com bear market, right? So if we think back to the dot-coms, you had the Amazons of the world. That stock went from basically 112 to about, I think it was about $6 or so. So a 95% drop. And it's very likely that we're going to see that on Bitcoin. The fact that people are saying, they're beginning to say, oh, it's not going to be in existence anymore. That's exactly what I want to start to hear to believe that we're close to a bottom. I don't think we're at the bottom yet, but when you hear more and more people saying that, because by the way, they said that in 2018 as well, after the highs in 2017, it was 20,000, it went down to 3,500, and you had tons of people saying, oh, forget about it, it's old, it's done. And then what happens? It goes to 69,000.
Gareth says that holding Bitcoin is still a great investment because it's here to stay. It's only a matter of time before it gets regulated and institutional investors start to join. According to Gareth, bottom will be created when people start to doubt the sustainability of Bitcoin out of fear.
Yeah, so to me, it's not so much of a concern because, a digital currency is still a fiat currency in that the Fed can then just click a button, kind of like they do now, and probably just print another $1 trillion or €1 trillion or whatever. And so the allure to me for Bitcoin is that it's that digital gold. So gold is a great, awesome commodity. I own a fair amount of physical. I'm invested in it currently as an investment via the GLD. And I like it because of that aspect. It's kind of a safe haven aspect. And I think that Bitcoin is becoming more and more of that. So it's going to kind of separate itself. And then if you look at where Ethereum is, and where some of these other cryptos are, they've got a big use case, right? They're being used for things, building platforms on top of platforms. And I think that's the key too, is I want to actually see Gary Gensler kind of come out with okay, these are securities. Okay, they're securities, that's fine. Make them do legitimate reporting, legitimate audits. I want to see that. That's transparency. That's a good thing. I'm not so concerned about the decentralization getting kind of taken away because they have a use case. And so to me, like an Ethereum is almost like a Google or a Apple. And I think that's what it becomes, of more of a security, while Bitcoin is more the digitalized gold. And then you have the central bank currencies, which are just created to kind of do transactions back and forth. And the government obviously still has control of that.
Bitcoin has been labeled as digital gold because of its properties. The Fed can't just print more Bitcoin like it can with the dollars. There is an extremely limited supply, and it is deflationary in nature because over time, its demand will continue to increase but supply will be limited. Gareth also implies that CBDCs are not too big of a problem because it is a desperate measure by governments to stay up to date with the latest technology and attempt to take control of it.
So, I'm never a proponent of after big drops exiting. It's, you want to wait for the bounce. You want to buy things that are on sale. So for me, if I'm looking at the S&P, and we can look at the S&P chart here, is that certainly it was a nasty sell-off. You could almost see the writing on the wall, and I'll show you how the charts kind of told us that we were likely going to see some downside. So if you take this low from June and you connect it to this secondary low, which is in kind of July, look at how it connects perfectly right through. So pivot low, pivot low, pivot low, and look how you broke down just before the Fed. So you had a break of that trend line. So what that tells me is that the market was going to likely head lower. The question is where to? Near term, I think we're probably headed back to the June lows, which is only about 150, 160 S&P points lower. So that is a big move, don't get me wrong, but that will be a big sticking point where you get a big bounce. I'm going to look to buy stocks into that level for a technical bounce. Now, I'm not going to hold them long term, but I'll hold them for a few weeks, get some nice bounces off of them in this environment. But I do think down the line, you are headed towards this pre-COVID high from February of 2020. That will be that target. I do think there's a chance by year end we get there on the charts of the S&P 500.
The S&P chart predicted the Fed's move, which is why technical analysis is so powerful. A breakdown was imminent after the daily closed below the trend line, and according to Gareth, it could continue to drop by another 160 points. Thank you for watching today's video. Show us your support by dropping a like and subscribing to our channel. See you guys tomorrow.